Hello, folks. Welcome to another edition of Market Action. I'm David Russell. So today we have the S&P. Basically it's like every single time I was actually looking. It's interesting. I hadn't realized this until yesterday. Every month since December, we've bounced at the 100-day moving average, and this is yet another. So what's interesting is we're seeing, we kind of got an extra boost in the morning with some headlines on the Bloomberg terminal about how Greece was, Germany was apparently at this point going to be a little more accommodative toward Greece, kind of reduce the sort of demands on them. But what's interesting is we were moving higher even off that, and I think this is simply, you have to be careful of being complacent, but to me this was one of the easiest to predict rallies, just based on the history that we've seen here, pulling back and bouncing at this level. And what's interesting is, yesterday we were really highlighting this. It's really one of the characteristics we've seen of this bull market for more than 2 years now, is that when things get beaten up, then they come fighting back. And so yesterday, the thing to me that really told me that we were in a good shape technically in terms of sentiment, maybe not technically, but in terms of sentiment, was a strength in the consumer staple stocks, because this was a horrible sector that came back with a vengeance yesterday. We saw a paper in Colgate-Palmolive. So I know it seems a little bit obscure, but to me that tells me that the animal spirits were back. The normal patterns we've seen of people buying the dips and looking for strength remains in effect. So what we're seeing today is just, every single major sector I look at is up. The only thing that's really down are bonds and the dollar. What's interesting is I think this is the first time in the history of market action I haven't had any red in my groups and sectors. We basically have strength in Europe. And then we see, interestingly, at the same time we see strength in Europe, the strongest index today is the small cap Russell, which tends to be more focused domestically. So it's kind of just strength across everything. To a certain extent, it looked like early energy was going to be the leading sector, but that's not even true now. What's interesting is it's the financials just continue to work, and we see a whole bunch of buying across the technology space. If we take a look over here on the Research Lab, market tool, we can take a look at this is a group I've shown you before called the Spiders Group. It basically allows you to drill down into the different spider funds. And if you look at the member performance here, you can actually see that technology has actually been, it was one of these measures I had here. It was really working its way up the ranking recently. I think it got confused here recently. It was one of the sectors that had really been kind of working its way up in the shorter term. But anyway, it is really strong today. And when we're seeing the actual strength in it, it's a whole bunch of different things. We're seeing things like the Chinese internet strong again, but with some of these software companies are fighting back. And then let me see some of the other areas. Let's drill down right into the XLK, and you can see what I'm talking about. Because I think what's interesting is, kind of Apple has, Apple has kind of just lagged for a while here, and I think money is leaving Apple and flowing into a lot of other technology stocks. And so yesterday, for example, Microsoft, we identified this level on Microsoft that was a really solid level, a flatline support level. And basically it's bouncing off there sharply today. And then we see some other ones like CA. We had some options paper in that not so long ago. Analog Devices, we've had bullish paper in that. So it's just a sort of whole mix of different sort of activity across the whole sort of tech sector. But then also in energy, we're seeing several different things. We're seeing the financials all over the place. We've talked a lot about the life insurers. These guys continue to work today. Things like Pru, MetLife, continue to just explode higher. One thing I want to point out is if you look over on Research Lab, every morning, it's a good idea to take a look at the Traders Network and look at some of the things I post, because I'm going to look at some of the different things that are setting up. Yesterday morning we identified an opportunity right out of the opening bell on Wells Fargo. Here we had basically a strong sector, a strong stock, but it had basically just kind of pulled back. And there it was, right at that 10-day moving average. We recommended basically taking a shot at it. And here's the thing, folks. You might just see a stock like Wells Fargo. Well, when you have the options liquidity in a name like this, you can move the needle pretty quickly with it. This can really work in terms of the options. So, every day we post some of these different things here that are worth taking a look at. Not very long ago, for example, I was doing a scan, and I basically came up with Intercontinental Exchange. I noticed the price action in this coming out of this kind of cup and handle formation is very similar to some of the other bullish action we've seen recently. When the stock pulls back, it goes under the 10-day, and then it comes back. The 10-day turns positive, and then we see continued continuation higher. It's really interesting to me to look at something like Intercontinental Exchange here because I think this stock is poised for a break to the upside. Also, I want to point out an interesting trend that we've been seeing, which is the Japanese economy. I know it's like, kind of obscure to a lot of us because, Japan trades while we're all asleep. But, they had some excellent numbers in terms of their machine orders, and that follows a huge upward revision in GDP on Monday in Japan. So I think it's interesting that, the Japanese story is not done. And I think that really says something because you're talking about, one of the biggest economies in the world and one of the biggest stock markets in the world. The other big thing today, though, was mortgage applications shot higher. And, I think it's interesting, and one of the things that I want to point out that I think is a possibility is, home builders have been a difficult sort of trade. They technically are kind of damaged here, the way they slammed into that 50-day moving average and installed. But, we see these mortgage applications up today, and it was driven by purchases. And it's driven exactly by
the interruption, Mr. Russell. We are now joined by Mr. Mike Yamamoto.
Oh, hey, Mikey. How you doing?
Hey, how you doing, David?
Good. So I was just talking about what we've been seeing in the home builders, just the mortgage applications today. And have we been seeing any paper there?
Yeah, you took the words right out of my mouth. I was just going to mention that because of that 8.4% jump we had in mortgage applications, I think people are coming off the fence and deciding they don't want to miss these lows, as you and I had been talking about forever. So, yeah, we had directly in the home builders, we had D.H. Horton in particular. We had the July 26s that were bought strong there. And then I know you were mentioning earlier about the financials as well that are getting a pop from all this. We had, at the regional level, we had Regions Financial had the July 11s bought first, and then also under open interest, there were November 11s that were also bought. The interesting thing about those is that both targeting the same strike price at the 11s, that's basically looking for new highs because they had stalled right at that 11, just below 11 in the 52-week highs before. So, and then interestingly enough, Mike Bordos had just updated USB earlier this morning, and then Voya. And then all of a sudden we get more paper in those two names. In USB, we had Mike had updated the July 44s earlier. Now we have the September 46s bought in size, so they're looking a little bit farther out. Same deal with Voya, in a little bit different in that he had the June 45s that were updated earlier, and we then saw that those exact same calls were sold and then rolled over to the July 48s. Those, by the way, were sold. The 45s were sold for $2.15, and the 48s were bought for 80 cents. So clearly there was somebody who got a nice pop and was taking enough money off the table there, but even upsizing the position a little bit into July as well at the higher strike. So, as you point out, I mean, this is just kind of we're seeing it all across the board here, and also, from the sector perspective, you said that there was the technology was showing some bullish momentum. Interestingly, today, all the names we've been seeing have been Friday, the weeklies that are expiring this Friday. We saw, and a lot of those are in chip names as well. Intel, we had big call buying in the weeklies that expire this Friday at the 32 strike. Something like 16 or 17,000 of those were bought in short order. Very much a big player coming in and initiating a buy program. In about 10 minutes, that whole volume went through and the stock started to move. Micron as well. We've had some 2550 calls bought at the 2550 strike. And NetApp as well. NTAP had calls bought at the 3550 strike. So pretty much, a lot of it. Also interesting, by the way, is you and I talked on Monday about big put buying in the SMH, which is the one of the major chip ETFs. So you almost kind of wonder whether guys are trying to cover their short positions in some ways and getting into these short-term Friday calls. eBay also had, by the way, some not exactly the same kind of technology company, but had Friday calls bought as well at the 61 strike. So definitely just, bullish paper all around. You mentioned energy as well. Again, shorter term, we had some call buying in Noble Energy rather, not Noble, NBL, ticker symbol, at the 4750 calls. But we also had calls bought in U.S. Silica.
Where was it Noble? What month in Noble? Was it June?
Those are June's. Yeah, June 4750. So again, those expire at the end of next week, so relatively short-term, practically weeklies. The U.S. Silica, which is a sand that provides sand for fracking, which I'm long of. I was happy to see that there was some September 35 calls bought. And what was interesting to me about those is simply that they're fairly out of the money with the stock trading around 32.5 or something like that today, but also just going farther out. So originally I thought, well, we're seeing some of this paper in the oils or in the producers and the E&Ps because of the crude oil jumped overnight, but because the EIA numbers today showed that there was a draw which matched the API numbers from overnight. But the silica paper goes out to September, so clearly somebody thinks that that this that there's still going to be some room to go in oil.
The thing about silica is, this is just one of these. This thing was nuts back, before the oil bubble kind of crashed last summer.
Mm-hmm.
I mean, it had this incredible run, and it just seems like this is kind of a new name in this sector. For a long time we haven't really thought of the U.S. being an energy producer, and now this company is one of the it's kind of emerged as one of the key ways to play that new trend, right?
You and I talked about this, I think maybe close to 2 years ago, David. We saw paper in this name, and neither of us had heard of it before. And I looked into it a little more. Coincidentally, a few days later, there was an analyst I'd never seen before who came on CNBC. And I remember specifically him making this call. I think it was on Fast Money. So I started looking into it. I've played this a couple of times now. Highly volatile. This is deep end of the pool kind of stuff. This one in particular has like 35% short interest. So you can imagine how it gets whipped around quite a bit. There's two other names that are often mentioned along this that are both sand names. One is ticker HCLP, and the other is EMES. They don't always move in lockstep, but when they do tend to move generally in the same direction, and when they do, SLCA, U.S. Silica that we're talking about now, this one's going to get whipped around farther in either direction because of the short interest and the beta that it has. But if you believe in the fracking story, and if you don't believe in what David Einhorn said a couple of weeks ago, which I tend to question, at least in terms of degree, this is one to give. The fans are definitely ones that are something to keep an eye on.
Yeah. So, folks, these are all members of our research lab fracking group. These are different companies that are exposed to this new growth sector in the U.S. economy. Just kind of interesting. If this is a high beta version or a high beta group in the energy sector, if you're a believer that energy is going to come back, this is an area to look. So if you go to Research Lab and you put in fracking or you put in some of these companies, you can find this group. You can drill down and kind of also get a sense of when their earnings are coming up. And some of that kind of stuff. Take a look at, let's see, Mikey, did we have any other paper today?
Yeah, we had, I think I'm not sure if you mentioned retail. I know we've talked about it, but Michael Kors had a very interesting bullish call spread out in November 50, 60 call spread. This was interesting. It was a big spread, 16,000, and also interesting because, as we all know, that name has just gotten beaten down quite a bit lately. So it may be that people are thinking that the flush has already has taken place. We'll see. It still has there's still a lot of naysayers, I think, but partly just because I think they got burned so badly recently. Not exactly retail, but certainly consumer discretionary. We had some call buying in Caesars today, which is another dangerous name. But when it moves, it moves. These calls, interestingly enough, are also September, but not. They're pretty far out of the money considering, even though it gives a little bit of time, but they're looking to get to the September 10s here, and with the stock trading, that's about a 30 or 40% increase from the cash right now. But that stock was just trading there not too long ago, like a month or so ago. So
it's interesting. We can look on Research Lab, and Oh, sorry, Mikey. Well,
No,
the thing
go
about
ahead.
this company is this is like a credit story. It's interesting. I was looking on Research Lab, the stronger groups today. We see casinos kind of near the top of the list, but it's kind of this. This is just a group that I continue to be very wary of. And if you look here, we're basically seeing that a lot of the strength today is coming from Caesars, which is, this is a one-day thing. This stock has been annihilated. And the other thing about Caesars is this company trades on the credit. They have a thing where like part of their company is going bankrupt or something. It's really complicated, and I've just avoided it in general. So I just wanted to point that out. But if we actually look at like Las Vegas Sands, MGM, I mean, these guys are not doing much when you consider the overall market up where it is. These companies are still just kind of weak. So I wanted to point out that even though we're seeing that strength on Research Lab in terms of the casinos, that I think it's kind of it's something of an anomaly.
Yeah, and I think part of it too is just bottom fishing, David. I mean, look at Wynn, over like the last year. I mean, like my God, I've been tempted so many times to try to get into that name, and frankly, thankful that I haven't, just because every time I think that it's formed a base or a bottom, it's just gone lower. So I mean, at some point they'll come back, but I don't know if they're ready just yet. But it is interesting. It also, I think, just shows, I think, that, as we've seen when we get these strong up days, people just start feeling their oats a little bit more, and, they start taking more chances, and I think that's one of them.
So, Mikey, there's one you and I were talking about on our conference call with Pete the other day, and I think this is interesting because we were waiting for it, but I started buying a little bit of OPCO Health today. You and I, this was one where we were saying that kind of, it jumped up over 17 real quick, and we were saying, hey, let's just wait for this kind of retest. But now look at it. What do you think?
Yeah. Well, we do have an open position in there. Unfortunately, it's down, but in the January 22s, I believe. But they haven't been annihilated given what happened to the stock. So what that tells me is that people still think that there was an overreaction to this merger, this buyout that they announced the other day. I looked into that buyout a little bit, and I don't know. It seems pretty good to me. It looks like an expansion of their business, and I think that I think people are realizing now. Also, when that stock got hit was when the market was very weak. So again, it's one of those cases, right, where a high beta stock, market weak, knee-jerk reaction in the pre-market is to sell. So I think, I agree, and I'm looking for an entry myself because I like the story after looking more into it, frankly. And again, we have those calls still open as well. We also had in the medical area Baxter, which we haven't seen in a long time. I'm also long this just as a very long-term hold. Actually, it's in my wife's portfolio, I think. But today we had June 65.5 calls bought. John actually mentioned it as his final trade on halftime a couple minutes ago, and the stock got a nice little pop, as John often has influence over that kind of thing. And we also saw some buying in Progressive Insurance. PRG had call buying as well. And then just a
where was the Progressive paper?
I'm afraid you're going to look asking that because I actually didn't have that.
I think it looks like here. I'm looking on the Options House platform. I'm seeing some volume in the November 27s. Is that right?
Yes, that's right. Yeah, that's right. Exactly. Yeah. And as you pointed out, we talked earlier that it's not exactly the same thing as other insurance companies, but it's just interesting to note that it's just not a name that we've seen very often. Do you remember? I can't remember seeing paper.
This thing appears once every 8 months, and that's one of the reasons I wanted to pass on it because for one thing, it's a property and casualty stock. Haven't been liking that space when you look at the bigger players like Travelers and Allstate. They've been pretty lousy. So for me, I think the strength right now it's in the companies that are exposed to interest rates like MetLife, like Pru, like AIG, Bank of America. So for me, it just seems like Progressive. It's in this triangle, and I'm like, you know what? I think there's a lot of better things to be doing right now than trying to guess which way PGR goes next, especially with the kind of negative headwinds in the bigger P&C space right here.
Yeah, agreed. Other paper we saw, I thought was very interesting was that Deere roll that we saw from the DE ticker from the June 92.5 into the September 97.5. So that that's a pretty healthy jump for strike for that $5 difference in that role there. And it's also, a little bit of, I think, a play on global recovery and, maybe the China stimulus taking more effect, that kind of thing. Also saw another industrial, well, I'm not sure quite how you classify it, Owens, Illinois, which is they make glass containers. Not sure how you classify that, David, but we saw July 25 calls bought there, and we do see that name occasionally as well.
Yeah, packaging stocks are usually in the material space. Where was the paper? It was July?
July 25, yeah,
nice.
For 45 cents to 60 cents. And then, another international story is the DXJ. That's that Japan hedged ETF, hedged for currencies. There was a big bull call spread bought out in November 62, 67 call spread. Pretty far out of the money, but interesting because it shows to me a lot more confidence that this is taking hold, and I know that the recovery in Japan is taking hold, given that it's both farther out of the money and also farther out in time. I know you and I were talking earlier, right, about the Japan numbers being strong overnight.
Yeah. Yeah, I'm really a believer here that the tide has turned in Japan. I think we've just seen too much evidence of it in terms of the data, and a lot of these stocks, I think are still. When you look at like the Japanese banks, those are the ones I was citing earlier in the week.
That's right.
That they just seem to me like these still have some opportunity in them. I think right now people are focused on stuff like Europe and everything else, but I think when you look at DXJ here and this pullback, it's still trending nicely higher. So I still think this is a pretty interesting place to be looking.
And remember, a couple of weeks ago or months ago, I think we were talking about that big pension fund in Japan, when that has it's like $1 trillion in this thing, completely conservative. They never buy anything other than bonds, and they basically had been mandated to start investing, and it's taken forever to get that to happen. But I think you're starting to see some of that happen in that market. So I think, and a lot of it's probably going into the banks. So I agree. I think there's seems to be a lot more legs for that trade.
Excellent. Well, hey, Mikey, thanks for jumping over and giving us an update on the paper.
Sure thing. I got to get back. We're still seeing more papers.
Thanks a lot.
All right. Take care, David. Bye-bye.
Okay. All right, folks, I will continue here going through some of the other things we're seeing, answer some of your questions. We are getting actually a question about SunTrust. I really believe that when you have something right now like the kind of shift back toward financials, that you need to just kind of drill through and find the opportunities when they present themselves. So you want to go to Research Lab and do something like the XLF, and you want to just look at, all right, who's down the most in the last week or who's up the least, and then you just kind of drill down the list. Most of these, for example, are real estate investment trusts, which are technically in the financial index. But you want to just kind of look through here. It shows how weird some of these indexings are, because they actually, Weyerhaeuser is actually a financial, which makes zero sense, I guess, unless you're an accountant. But it's interesting just to kind of look through these lists and to find where the opportunities might be. You can also go. We have a bank group, like the regional banks here on Research Lab, and you can kind of just drill through and find, some of the things that have been lagging. So I'm looking at something like SunTrust here. I did like it when it was, lower, but these are just jumping. You want to just be waiting for these guys to pull back. Even if they pull back to the 10-day moving average or the 20-day moving average, I think there's going to be continued upside in these. The XLF, it's hard to even see it on this chart, but the XLF is really on the verge. We look at a long-term chart of this. It's really on the verge of breaking out and running to, I think if you look at this whole collapse, that we saw back in the between mid 2007 and early 2008, it's trying to break through some of these levels. And I'm going to actually remove some of my drawings here because I have so many things on here. But if we delete these away, and we basically see that what is this level right here? This is September 2008, this giant doji, and then it died after that. Well, this was a huge month. I think this was a month. I think it was September actually when Lehman died. But the thing is that this had a huge amount of spinning around in this month of September 2008. And the XLF is still fighting against this giant doji. But the thing is that now, now it makes sense that, now I think it's the time we break it. We see too much bullishness in terms of the fundamentals, with interest rates moving higher and everything else. I think one of the other things important to realize is that, the Fed's not going to raise rates, and LIBOR is not going to be moving higher if the banks are not in better shape. So, these guys basically they regulate themselves, and if rates are going to move higher, I think it's this is still a tide that there's more upside in. So I think there's going to be a lot more meat on the bone here. You don't want to rush things. If you do, there's really two things to do. One is you go out in time and you buy long-dated calls and you're willing to deal with some losses in the short term. Or you have to have your discipline and wait for the pullbacks. Right now, SunTrust, in my opinion, is a little overbought, and you're going to get a better entry, and I would wait. I'd also keep my eye on some of the things like interest rates, and let's take a look at some of the things on the economic calendar as well, because, the whole Greek thing at this point, in theory there are Greek maturities on Friday. I'm not really sure how much that even matters in light of some of the news we've seen, but at this point, there are going to be things that are going to cause some potential sort of, moves in interest rates in the short term that could affect how these banks trade. Now, right here, I think when you look at the 10-year, we've broken a pretty clear support, resistance level, and I think we're going to continue to see rates just drifting higher at this point. I mean, the big risk to interest rates was that Greece defaults, and then Greece defaults, the ECB has to pump a bunch of money into the economy. But if Greece doesn't default, then we basically have, QE in Europe, which the Europeans don't even want to do QE, and we're seeing a lot of strength over there. I mean, I'm not even sure people are talking about the need to do QE in Europe when you look at some of the numbers that have come out, in the last few weeks, because they're really not bad. So I think we're looking at right now, the idea of quantitative easing in Europe, I think, is increasingly, diminishing before our eyes. So anyway, all this to me points that we're going to keep seeing upside in the financials, and I think that there's still opportunities here. Why would REIT make sense if rates go higher? REITs don't make sense. It's a kind of freakish thing that because of the way S&P does these indexes, they put real estate investment trusts in the XLF. I don't know. I mean, for some reason, this is what they do. It doesn't make any sense. But I just want you guys to be aware, when you drill in the research lab and you look at the XLF ETF, you're going to see some of these real estate investment trusts in terms of the weaker names. And that's just something to be aware of, so you don't get confused by that. Real estate investment trusts are completely different than banks. They move on completely different fundamentals, but for some reason they're grouped into the same index. All right, Eli Lilly, I mean, this has been a pretty insane move. And at this point, I think, this is something that this will give other entries, but this is just at this point something you're going to have to wait for. I think it could test back down to 80, and I'd be looking for something down there. At this point, again, we have things like the 10-day moving average coming up. And I actually want to point out why it's important, I think, to look at some of these hourly charts for your shorter-term momentum. I mean, this thing just came along, and it bounced along. It was kind of hard to see the opportunity if you looked at the daily chart. But if you look at the hourly chart, I mean, this was a really nice setup along here where it just kind of held this 50-hour moving average and then just took off. So, I just want to point out that when you have this kind of short-term stock that's ripping higher like this one is, you get that first breakout, and then very often the first pullback to the 10-day moving average after the breakout is very often a good buy. And that's what we had in Eli Lilly. I think this is now a name you want to be kind of careful of. What I'd really be looking at in terms of the healthcare space, like I said, I think OPCO, I don't think it's going to rally right away, but this stock is kind of basing out. I mean, the thing is now it's been holding 16 for several days. This isn't a monster uptrend. It still looks pretty good to me. So I think this is not a trade, though. This is something you have to be a little bit more willing to have some volatility or go out in time. I think now, for example, would be a great time to go to OPCO to do something like buy the Jan $18 or $20 call, something in this range. I did something like, in this case, I think I like the 19s the best at this point in time, given the bid-ask spread, given the overall pricing here. This, to me, would make some sense, something like OPCO. Another one I've been watching, and this is one Mark Chaikin's talked about a lot, is Molina Healthcare. This is a stock that benefits from some of the ways they've changed Obamacare in terms of the health insurance. Basically, this thing has just been a beast. Everything's been good in terms of the fundamentals. Now Research Lab is flagging the pullback to the rising 50-day moving average. This looks like a pretty good entry to me. Healthcare is really not where people are looking today. They're thinking about other stuff. But I honestly think that's the time you want to be thinking about these names. This stock is in a monster uptrend, and I think there's reason to expect further upside. Here's another one that I don't know very well, but this is a biotech stock, that's just been trending higher. Advexis, I don't even know anything about it, but Research Lab is flagging the pullback here. Just want to point it out. Not really sure it's exactly the time to buy it, but it is kind of interesting. This one might kind of hold here, base out a little, and continue higher. But I got to tell you, some of the technical patterns we've seen in these biotechs, Research Lab has found a lot of really good stocks that no one else even notices. Stocks like Anacor Pharmaceuticals. There have been a bunch of other ones that Research Lab has flagged on various occasions, and ADXS is one of those. And it's just kind of interesting here. All right, let me take a look at some of the other questions we have coming in. I have a quote trigger for a market order in Bank of America, anything under 17.5. You mentioned stops, but I don't see it as an option. I don't understand your question. I'd like to answer it, but if you could please be a little bit more specific. Is JD just resting here? Well, JD is a great stock, but I think, my honest belief is JD is a stock that will dive, and just when you're terrified of it and you see your life flashing before your eyes, that's when you should be buying it. I've learned that. I got stopped out of it. I bought it at the bottom, and then it ripped higher, and then it tanked, and I basically sold it with a very small profit. And I'm kind of embarrassed about that. But I think at this point, this stock I think is setting up as one of the great stocks for the next year or so. Everything about it remains incredibly bullish. We've seen some really good paper in it, but it is not a great stock to trade. This is really one that you got to get when it dives, and then be willing to kind of hold it through volatility. So I think this stock, there's a chance it's going to take another dive back down toward 35 or so, somewhere toward the top of this range, kind of across here. I'd be looking for that, but then when it goes down there, I think that's when you have to have the discipline to buy it, or to be getting long some calls. How about CFR? Well, this looks like a lot of these other banks. I mean, the problem with stocks like this is it doesn't trade a lot of options, and it doesn't move that much. I think when you look at it, it could go to like 82. I mean, that's like, I guess a 5 or 6% move. It trades 280,000 shares for a stock of this size. I mean, I think it'll keep going higher. There's probably a lot of good stuff in it, but I think you can be a lot more effective trading options in stocks like Wells Fargo and Goldman Sachs instead of messing around with some of these more obscure banks. But there's probably some kind of strong story behind this one. These are companies you really have to kind of sometimes drill into and understand, and usually I don't really have the time to really understand all the nuances of individual banks. The thing I've learned from kind of studying them and covering credit and some of these things is that the real story in these companies is not in the SEC filings, but it's actually in the regulatory filings that they do with things like the controllers of the currencies and some of the state level regulators. And if you don't know really what you're doing, I mean, you're not going to really know what the truth is about these companies. If you do a lot of research or you find someone who really knows what they're talking about. But I just think they're not really worth the hassle if you're not some kind of institutional player. I think you can make a lot more money with a lot less work buying calls and stuff like Citi and B of A. All right, let me take a look. We're about trying to make, don't forget, we're not just investing money, we're investing our time. And, the amount of time it's going to take you to figure out Cullen/Frost bankers, you probably could have come up with some really good other strategies. All right, let me see. I'm trying to see these questions here. Do you see a catalyst on Amgen? It's been range-bound all year. No, I'm not really sure of all the events that could lie ahead for a stock like this. I was saying that it was interesting around this level, but right now biotech is just not where people want to be. This is to me kind of like Gilead. When it starts moving, it will. But I think you need to wait. Take a look at Gilead because we see what this name is. Basically, when the moving average is turned, the 10-day moving average started rising. It got above the 50-day, and then it took off. Well, Amgen is somewhere over here now where Gilead was in early April, and I think you can kind of wait and get some kind of clarity on that. All right, let me see. Profit taking in VDSI when I made. Do you think it continues? All right. So does Vasco data continue to move higher? Long term, yes. Short term, it's kind of double topping at this peak from what is this, February? I don't like the look of that in terms of the next few weeks. So I think the stock at this point is done for the time being. Actually, I'm going to put my headset on 1 second. So I think there's better places to look right now. I haven't looked at this one in a couple of days. One of the others I think that is interesting here that we flagged on various occasions is Qualys. We were basically, citing the pullback to support in this name in early May, and it just continues to work higher and fill this gap. I think Qualys probably has continued upside. And I'd be looking to a name like this right now instead of Vasco Data. If you jump over to Research Lab once again, you take a look at some of the groupings here, you're going to find other alternatives, other stocks in this space that are going to offer similar things. I would really suggest digging through these, looking for the opportunities every day or so, and you're going to find some. You're going to say, well, I forgot about something. Maybe, Palo Alto Networks, this thing has been on fire. But there's going to be a point when it pulls back. And the way to find it is, you'll lose your – I know myself, I have trouble keeping track of all this stuff. It's really why I created Research Lab. So the thing is, you see a strong group, just go to Research Lab and then look for who's up and who's down. There's going to be a time when Palo Alto Network is the weakest of this group on the 2-week basis. You're going to see that opportunity, that pullback, and that's when you're going to want to be moving on individual names. If we look here on this, like right now in the last week, Symantec and CHKP are the weaker ones here. I'm not really sure about these companies as much, but this is just the kind of stuff I'd be doing and looking around for opportunities. All right, let me take a look. Take a look at TROV, please. TROV. Well, there's obviously something bullish in this. I don't know if the biotech has a biotech-sounding name. This is one of these stocks that, when you look at the sound of it, it looks like it's going to just rampage higher, then stop, and then go right back down. It sounds like they are in a relatively early stage of developing technology that is nowhere near being marketed yet. Stocks like this, they're like the 3D printer stocks. They'll go straight up for a while, and then they'll just die. So this is a cult stock now. It won't be forever. So I just think you need to be aware of that. Bid-ask spread on the equity is pretty wide. It probably has horrible options liquidity if it even has options. So again, an interesting stock, but I think you really have to know what you're doing with a name like this. I think something like this, you really want to be using your short-term indicators of momentum. And I think it's interesting if you look at like these sort of drops. That's when you need to have the kind of the cojones to buy it, or not at all. But the place you do not buy it is at a high like this. That's not what you want to do. Let's actually look at it like, for example, the 10-day chart with hourly bars. Something like this, how it was banging down into that 50-hour moving average. These are the places to have bought it. That's why you have to use, when you're looking to do these sort of stocks, you really want to use that shorter-term chart. You got to realize this is momentum trading. It's a different sort of thing, and you need to have confidence in the short-term trend, and you need to buy when you're scared. But then you need to get away when it starts to break. You can't just, if this thing goes up and that 10-day moving average starts falling, you can't say, well, maybe I'll hold it a little longer. Doesn't work that way. This stock will go right back down again. Pizza, PZZA, what is this, Domino's or Papa John's, I think, Papa John's. This looks terrific to me. It's broken out. This is a totally different kind of stock than that biotech. This is a sort of stock that can just continue higher given the economic situation. Now, I'm not really sure. I haven't eaten at Papa John's probably, God almighty, a long time. But the thing is, when a company like this is doing well, I mean, these guys have thousands of locations or at least hundreds of locations across the country. They're doing something in terms of their product, their marketing strategy. Something is working, and it's not working in just New York or just Chicago. It's working nationally. That's a real trend. And when these stocks do well, they keep doing well. So I think a name like Papa John's, it just broke out, pulled back, bounced fast. I think it keeps moving higher. All right, let me see. What do we think about CHMT? Well, this is now kind of in a treacherous area. I don't really know. I think this looks like it'll kind of stall here. Don't really see it's kind of just petering out. Even if you look here, just kind of petering out below its highs. This is another stock that you have a strong bounce, but now it's run quite a bit. So I don't see anything good in this. I would look for this to kind of hold some kind of support. I'm not sure what the forward-looking calendar is on this either. Some kind of industrial chemicals. This to me looks like one that you need to wait for a breakout. I mean, it's pretty close to that 52-week high. It could languish here for months. What do I think about auto retail? Well, I mean, these are different companies. AutoZone and CarMax are two completely different companies. I haven't really looked at AutoZone. It's kind of like Chipotle Mexican Grill. It doesn't move very much, but it's really expensive. This looks to me like this is getting ready to move higher. I've noticed this pattern before, and I've talked about it. When it closes above that 10-day moving average a couple of days, the short-term momentum is starting to turn bullish. It was kind of bearish. Now it's kind of neutral. Now it's starting to turn bullish, and the longer-term momentum is bullish. So I think, to be honest, this is probably pretty good, and you have a decent stop loss under this recent double bottom where I drew here around 669. Not the kind of name I normally mess with, but I tend to think AutoZone is probably setting up to move higher here. Orly, this is very similar as well, and it looks like this one's getting back into gear as well. Nice gap higher. Held that gap, tight range. Now it looks like it wants to move higher. I tend to think O'Reilly Automotive is doing well also. Someone says that Cullen is big in oil and gas finance. That was CFR. That's interesting. It very well could be, but you just have to make sure. It's not always clear that good news is good news in the banks. You just have to understand exactly what's happening. So I would just suggest that you really do research before you just assume that it's going to move higher with oil or something like that. What do I think about puts on GoPro? I really got to say Jeff Yady did a great job identifying this opportunity when this stock broke above 50 and then held that level. Yeah, I think GoPro near term is kind of dead. I don't know if I'd buy puts on it. This company seems like it has a lot of potential catalysts. I think it's going to stall here. I think this is a bullish stock still, and I think it has some decent bullish momentum. I would not want to bet on it being bearish unless there's a really good reason to bet that. The last earnings report was good, and these guys, they can put out something any day. Hey, we're introducing this new, flying camera or, a new camera for your dog, and people think it's cool, and this thing will jump. So I think there's many better stocks to short than GoPro. All right. So, there's an individual asking questions about some of the order management stuff on Options House with Bank of America. I'll tell you, I'm not really super sure about that stuff. I don't usually use contingent orders. So, I'd suggest, to call customer service or look at some of the webinars on the website. I know there's quite a lot. All right, let me take a look here. How about Alcoa? Alcoa looks pretty horrible to me. This stock, you just need to wait for the momentum to confirm here, but there's nothing good about the way Alcoa has traded. And I'll tell you, the other one that I've watched and I really think looks like, terrible is U.S. Steel. Yesterday I was mentioning on Market Action that U.S. Steel was disturbingly weak on a day that we saw strength. And we look here, If we look at some of the others, like look at the steel stocks are not doing too bad today. The SLX Steel ETF is up like 2%, and where's U.S. Steel? It's down almost 2%. I've been saying the price action in this stock looks horrible. I think U.S. Steel could get cut in half here. There's something not right in this stock, and if you look at it, it's really not very cheap, and the last earnings report was pretty bad. So maybe they're exposed to the strong dollar. I don't know what it is, but this stock is forming a triangle, and it's just it's sliding back under that 50-day moving average. It's about to break the 100-day. I think U.S. Steel is setting up here for something pretty ugly. So anyway, Alcoa. You ask about Alcoa. I think Alcoa still looks pretty gnarly, but at this point, see, I have a flat line down here near 12. So, this is probably near a support level I drew a while back. I think Alcoa is getting near support. That does not mean it's a buy. I don't believe in just buying stocks that are trending lower because they're at support. It just doesn't make a lot of sense to me. And someone had liquidated this thing. This needs a whole new community of people to buy this in terms of investors. Institutional investors. This is obviously at least one big investor, if not many. There's something that happened here in this stock. Maybe these guys went to Alcoa factory, they met with management. Maybe there's some research report that really knows what they're talking about that was very bearish, but something is not right in this price action in Alcoa, and I think it's going to keep going down. Medical cannabis stock, GW Pharma. I don't know really about this stock. GWPH, I think is the ticker. It's been pretty bullish, but I would almost say I don't really know anything about their products per se, but I would also just kind of warn against things that have a real kind of cult thing out there, because you really don't know what could happen politically and other stuff, or people decide that this isn't cool. I mean, what happens if someone dies of a marijuana over? I mean, everyone likes to talk about marijuana and think it's so funny, but my point is just that this is just a weird stock, and weird news can come out on stuff like this. And I think this is investing, and this is not the sort of thing I think is a responsible sort of stock to be trying to play with. Unless you really know the story, this can just be weird stuff. The fact that people talk about something like being a marijuana stock, I think, it makes more sense to be looking at cancer stocks, things that really, have that don't have the same sort of risk associated with them. So I would just say that, I think there's something that's a big craze, but the problem is, you're dealing with that sort of fad appeal. But technically it looks pretty good. I mean, when you look at this level, this still looks pretty good. I just don't know anything about their product per se. Dunkin' Brands, DNKN. I've been a fan of these casual diners. This one's been coming to life recently, but it's kind of at this level here where it gapped higher and now it's just kind of stalling. I think, to be honest, this could just kind of consolidate here for a while. I would not be messing around with Dunkin' Brands. There was another, I can't remember what it was. There was another that was, that actually, Papa John's had actually broken out. Something like that looked a lot more interesting to me. GBLX. No, look, stop asking me about stocks that are under $1. I'm sorry, I just don't know. What do I think about puts on the SPY short term? Well, when you want to look at the S&P, I really like getting my futures chart up because this tends to work. I like to look at this hourly chart, and the MACD on this is still bullish. And the thing I've learned about the S&P is the MACD on the hourly chart tells you what's going to happen, and this is still bullish. I think this is not the time to buy puts yet on the S&P. Every time we've come off these long-term support levels, we've continued higher. I think we continue to drift higher from this. I'm not saying you just buy the top right here, but I think now is the time to be looking for stocks that will come back to life. And I'll tell you, that's the reason why I like a name like OPCO here. I mean, this is a stock that when people come back, they're going to say, oh my God, OPCO is down a bunch and this is a bullish chart. And they're going to start oozing back into this name and it's going to start running again, I think. And that to me is what my approach would be here. Stocks like NXP Semiconductor as well. This stock pulled back, but now it's just ripping back higher. Skyworks was one of our picks yesterday, is up a bunch today. I think these are some of the areas, but I'll tell you, I would be looking for example, here we go, C-Trip. This is one of the great stocks right now. A lot of people don't talk about it, but this is one of the great stocks in the market. This thing has just consistently done well, and I think it's got more upside. Look at this pullback. I think right here, C-Trip is looking pretty good. Another one is Express Scripts. I mean, here we have a stock that basically it's coming off this bullish triangle. I think this continues higher. This stock to me is like a whip. As it accelerates, this is, options have gamma, which means that they accelerate as the stock moves higher. The delta increases, so the actual leverage accelerates. Well, I look at a name like ESRX. I would say the stock itself has gamma. The more it starts moving, the more it's going to run. This stock is in a great space. It's a secular growth space, and it's done nothing all year. And it's got a bullish triangle. It made a 52-week high not very long ago, and now it pulled back to the 50-day moving average at the bottom of the triangle. I think this stock rips. This is where I'd be looking. Names like this. I think even if the market pauses here, a name like Express Scripts in a month is going to be a lot higher. That's what I think. Please look at Ruckus, RKUS. At this point, it looks like it's poised to work its way higher. I'm not really sure about their business. They're probably in this. I don't know much about it. I don't like messing around with stocks when they gap lower. But if you like it and you have a good reason to like it, fundamentally. I mean, this could be one of these companies like Arista or something, which has been running hard. When it just basically, it was a good company. It just languished, but then when it started moving, it started moving. Ruckus could be like that. So I would say if you have a good fundamental reason to like it, it looks like now would be a good time to do it. It's holding this level here, and it made a higher high not that long ago. Has a decent double bottom down here above 10. So I think Ruckus looks pretty decent. Netflix up more than 4. I mean, Netflix is just going to 1,000, I think. I mean, at this point, I don't want to be complacent and just say you buy it recklessly. I don't think so. But Netflix is going to be another one of these stocks that you need to be careful of things like earnings and not buy it right before earnings, because I think there is risk. And this stock is also, it's going to run a lot. And the thing is, like, this is the kind of company that it could run into earnings, beat estimates, raise guidance, and fall 10%. This is what you've got to be careful of. And I think in Netflix, what you're going to want is you're going to want to see it. You're going to want that to happen. And then you're going to want to buy it after it's going to fall on good earnings, and then you're going to buy it. In my opinion, that's the way to trade something like Netflix here. This thing has just run so much. But you've got to trust the trend in this. And right now, you don't have a good entry, but I think it continues higher. Someone exited a loss in Delta. Delta is probably the worst thing that's come out of my mouth in the last month. Worst idea I've had. I just want to say that right now, I still think that these are going to give an opportunity, but this is something where you're going to want to use the shorter-term technical things I've said. You're going to want to look at a chart like this. You're going to want to see these moving averages turn higher, and then you're going to want to wait for that. And this is just not giving it yet. You're going to want to wait for something like that 10-day moving average to rise. You're going to want to wait for the 20 to get above the 10 to get above the 20-day, the 20 to get above the 30-day. That's true in all the airline space. And I think right now, people are just destroying the airlines because they can. There's a lot of other places that are looking for opportunity. And, these are not going to start moving again, in my opinion, for several weeks, if not several months. But there is going to be a good trade in them, and these will probably give us another entry in the long side, but it's probably a few months off. We've really got to use the moving averages for the cues in this. We've got to wait for the moving average to turn in our favor, and they are not yet turning bullish. And that's the problem. I mean, American Airlines, what happens if oil shoots up another 20, 30? I mean, this stock could go down to like 30. It could go down here. Don't think it can't. That when you're bleeding lower, you just can keep bleeding. So you really need to wait on this one. Mobileye. I don't really know this company. I don't look at it very often. MBLI. Now this company now is a relatively new stock. Now they have a 200-day moving average. This is the kind of company that could actually start running. I don't really know anything about their business. So, I would just say you should do some, kind of just do some research on it and know. But if this is kind of like Ruckus. In fact, this is a bullish triangle down here we have on the bottom. So I think at this point, this is something of a bullish triangle. It looks pretty bullish, but I think also I would just want to know more about it. The fact it's down today with the rest of the market up also is not something I really like to see. Rite Aid, everyone loves to ask about Rite Aid. I know it's bullish, but, I just still think that this is a stock that I just don't think this company, this is a coiled spring that has already sprung. I would really, if it goes above 9 and breaks out, great. But, I don't think this has a lot of oomph in it. I'd really say if you want to play stuff like this, I'd really point to something like a Molina Healthcare. I think a name like MOH has a lot more ability here. This stock has not yet finished its run. This is a relatively new company. I remember when this company went public actually back in 2003 when I was working at Bloomberg because they wanted me to write a story about it. All right, let me see. Well, I got to actually be jumping back over to IOP. Some of the other things I wanted to mention was, let me just see here. In the morning, we're going to have the Chinese industrial production and retail sales, and we have U.S. retail sales. So, I still think that some of these retail names are going to continue to give us strength. I don't see any right now that really stood out. American Eagle, we were recently citing, and that one worked. I had identified Ross Stores as one I thought was turning higher, and I still think this one is. This is a stock that I think has the ability to make a run higher. It's holding this level from January, and look, it has spent 5-6 days above that 10-day moving average. Look at MACD starting to turn higher. I think Ross Stores could now start to move higher. So want to just point that out. And the one thing I want to make sure of is when are earnings in this? See, we have some time until earnings. It has a really strong track record. Okay. The other one I want to point out, which is working higher today, which I think this is a stock we've been talking about on and off for the last week or so, Bit Auto. Research Lab was flagging the pullback to the rising 50-day moving average. Yesterday, Heat Seeker detected a bullish call spread in July. I think it was a 75. I think it was a 65.75. I can't remember, but this one, I think this stock is nuts when it moves. And I think this one could be coming back to life. I would say this is to me, forget about Rite Aid. This is a stock that moved as much as Rite Aid did, but it's way below its high. I mean, this stock could run back to 90 and then die. I think it's got a lot of upside, and I would say let's not forget about Bit Auto. The other one is, Baidu. We had some bullish favor yesterday afternoon in Baidu after I mentioned it, just kind of bucking that 50-day moving average. Let's see what happens in this name. Dollar General. Well, it looks like it's breaking out. I don't know exactly when you look at these, but I think, for example, Walmart just continues to just be a disaster. People, it looks to me like Dollar General is going to continue higher. Had a gap higher here, and it basically didn't back down. Even when the market was getting beat up a few days ago, this thing just didn't even flinch. That tells me this is going to take a run. Maybe Dollar General needs to be a $100 stock. Maybe that's just all there is to it. I don't have. You have a bunch of questions here. Someone is asking. Let me just take a look at. We look at Starbucks a lot, so I'm going to take a look at Panera. Then I got to jump. PNRA. This is pretty bullish, but I mean, what I would say in this. Let's look at this one. This is one I use as an example. Align was one that I was bullish on, and I actually own. I had been watching it for about a week, and then it shot higher, and I bought this pullback right here on May 28th. I bought it near the lows that day. So, this is an example of you have this gap higher, the tight consolidation. You want to wait for that first sign it's moving, and then you need to buy that first pullback, in my opinion. So when you look at something like Panera Bread here, I think it's exactly like that. One day, this stock is just going to shoot higher. It's going to probably go to 190, and that first pullback, that's what you got to wait for. But it could just drift until then. And I would say the other thing to do is if it gets down to the bottom of the range, down toward 180, then you need to also be a buyer. But right in the middle of a range here, this one might be a really frustrating thing to do. It could just drift here for a while, and it could pull back. It could pull back toward like this level, fill the gap a little, and then explode higher. So for me, this is a stagnant sort of neutral stock at this time. Okay. Well, now don't forget, end of the month we are going to have Invest Like a Monster, and Mikey's actually going to be there. I don't think he's going to be speaking, but he will be there if anyone wants to meet him. I'll be there along with Pete and John, Ron, some of the other guys from Option Monster. Tomorrow, speaking of Pete, he will be our guest on Market Action. Hope everyone has a great and profitable end of the trading day, and we'll be back tomorrow, folks. Take care.